All right. Good morning. My name is Jessica with the Kansas Small Business Development Center at Wichita State University. And today I have David with us who is going to answer some questions about 1099s and how they affect businesses. Good morning, David. How are you?
Good morning. Thanks for having me join you this morning.
Yeah, of course. And what can you tell us about 1099s today?
So 1099s, they are government documents, and it's this time of year where everybody's thinking about taxes and tax reporting, and 1099s are certainly a very important part of that as well. Generally speaking, 1099s are a document that is used to report income to the government that's generally non-employment related. Oftentimes people think about contractors or subcontractors getting 1099s, and that's a spot-on assessment. They do. But beyond that, 1099s can also be used for such things as interest and dividends, even obscure things like barter transactions. If a business would engage into a barter transaction, that's a reportable event, and there's a special 1099 form that is used for that purpose. Remember, this is not just for the federal government, rather, but also your state of jurisdiction that you operate. Typically, those 1099s are reported to the state as well. They're the local Department of Revenue. Here in Kansas, the Kansas Department of Revenue would receive those. The 1099s have an interesting history. The first 1099s, per my research, were actually issued all the way back in 1918, kind of about the same time that the federal tax rules first came into play. The purpose at that time was used a little bit differently, but still 1099s have been around for well over 100 years. And what I find very interesting is we talk about 1099 certain types here. There's actually more than 20 different types of 1099 forms that may be used during the course of a tax year.
Wow, I had no idea. Can you tell us how that might affect businesses and what the use of 1099s is for a small business?
Absolutely. And the impacts are big. And I'm going to start with this as kind of a standard disclosure is as you and I are talking here, sharing this information to our viewers, this is not to be considered legal, accounting, or tax advice in any shape or form. This is for informational purposes only. And this is going to be a high-level interview. There's a lot of very granular information here in this 10 plus minutes. We're going to talk about this. We really recommend that you consult the IRS website. There's some very good publications and instructional sets to review, as well as consult with your accountant or your tax advisor for more details as well. So having said that, one thing I would start with is sometimes there's confusion about who needs to generate that 1099. And so from a business perspective, small or large business alike, the 1099 is generated by the person that pays the bill. So if you and I are engaged in a business transaction, and I'll just keep this real simple. Let's say that maybe you are providing snow removal services for my business. So
Okay.
I'm paying you as a vendor. In that particular case, I'm paying you the check for your services. In terms of that, also, I'm going to be the one to provide the 1099 to you as well for those services, if it's applicable. And that's a big part of it, if it's applicable. So whoever pays the bill is the one who generates that 1099. Where
Great.
this whole
Okay.
thing starts is you want to have a properly executed W-9 form on file. And a W-9 is a taxpayer identification number certification, in essence, if you will. This is something you want to get in advance. And so when you get to the end of the tax year as a business owner, business manager, these 1099s need to go out in a fairly tight time frame, which I'm going to talk about here shortly. So you want to have that W-9, or you have to have that W-9 in place before you can do the 1099 filing to determine if it's necessary or not. My personal recommendation and what I've done over the years is, in my years of running small businesses, is at the time you establish that vendor relationship, that's a good time to get that W-9 executed at that point. And this is not an annual event. The W-9 runs into perpetuity, if you will, unless circumstances change in that business relationship. There's an ownership change or structural change within that business. The 1099 may be an annual event, but the W-9 that occurs up front, that's typically a one-time event, again, unless circumstances change. Now, having said all that, there's a dollar threshold that does apply to these transactions, and it is typically $600. But I can't emphasize this enough. It's going to be based upon circumstances. There are some interesting caveats where it could be as little as $10. And there's also caveats where it could be as much as $5,000 for a reporting threshold. So again, understand your specific rules to your situation and what 1099 specific form that you're filing. Now, for small businesses, you could end up filing any number of these 20 plus different types of forms. But in my life experiences, what I found is there's typically going to be two that are more commonly used. And these are the ones that tend to create the greatest confusion. And that's going to be the MISC and the NEC. MISC is just that, short for miscellaneous. It's kind of a catch-all bucket. NEC stands for non-employment compensation, and this is a fairly new document. It was used some years ago, kind of went away for a little bit, and then the last couple of years it has come back. And again, what I have found in my own life is I tend to file more NECs for my small businesses than I do the MISCs, and it's just kind of the nature of how things work. So here's the difference between the two. The NECs are going to be used for services performed by someone who is not an employee. So you kind of think about the general contractor type conversation. This is where you're more typically going to use the NEC. Again, check your rules, check your circumstances, but generally speaking, this would also include, interestingly enough, fees that may be paid for legal services to an attorney. This is not for awards, so maybe you're subject to payments on a claim, a lawsuit or whatnot, but we're talking about just straight legal fees that you're paying a law firm for services, and NEC would typically be used in those circumstances as well. So NEC, services by a non-employee, contractor, subcontractor, et cetera, and then also legal fees that you may pay. MISCs, and the easiest way of explaining it, is going to be everything else that doesn't qualify for another type of 1099. So things such as rents, prizes and awards, other income payments. Basically, again, if it's not going to be filed on an NEC, it may be filed on an MISC. There's exceptions to when you need to file one, and this is important as well. And so we say, okay, you get a 1099, and that's not exactly correct. If you are a corporation, if your vendor that you normally would provide the 1099 to, if they are a corporation, then you do not need to generally provide them a 1099. There's exceptions to all of these rules, but generally speaking, if they're a corporation, you're probably good to go. Partnerships and LLCs. And the LLC is complicated because if the LLC elects to be taxed as a corporation, then they may be excluded. So this is why the W-9 is so important to get up front, because the W-9, when it's completed, will indicate, the vendor will indicate what type of entity are they. Are they a sole proprietor, individual? Are they a corporation? Are they an LLC? And if they're an LLC, what is their taxing structure? And that's going to give you the direction of if you need to file the 1099 on them or not. Again, if they're a corporation, generally you don't have to. So if we think about this as a decision tree, the first decision we look at as a small business is, first of all, you want to look at the dollar amount. And generally speaking, again, I'm speaking generally, if it's under $600, we disregard. If you have vendors that in aggregate for the year you've paid over $600, then you want to look at the type of entity. If they are an exempt entity, such as a corporation, you can see the funnel keeps getting smaller and smaller as to who you actually have to provide that 1099 to. So my suggestion is you start with the dollar amounts. Anything under $600, we don't worry about. If it's over $600, then we look to see what the entity is, what type it is, to determine what, if anything, we need to do. All right. So having said all that, there's a really, really big change. And if the viewers forget everything we talk about here, this is probably the most important thing to hear today. And that is, starting with the filing season of 2024 for the 2023 tax year. If you have in aggregate more than 10 informational returns, more than 10 1099s that you're filing, they must be filed electronically with the IRS. The IRS will no longer allow them to be filed on paper form manually. If it's less than 10, you're still okay. And that's going to be true for a lot of small businesses. You'll still be under that 10 threshold. But if it's over 10, It has to be filed electronically. And please refer to the IRS instructional rules there's one that combines the NEC and MISC reporting requirements into one set of instructions, and it gives a lot of good information and a lot of good web links as to how to address that. Lastly, I want to mention a couple of different things here. Filing deadlines, and this is terribly important as well. If you do have to provide a 1099 to somebody, recipients of all types of 1099s need to have that in their hot little hands, or at least needs to be postmarked by January 31st. And I recommend be the good business owner, get it to them by January 1st, but certainly it needs to go out by the end of January. Then as far as the reporting to the feds, and that's primarily where you're reporting to, NECs need to be filed by January 31st as well to both the feds, that has to be filed by January 31st, whether it's electronic or paper form. Either way, January 31st is your deadline for filing, not just to the recipient, but also to the feds. The MECs have a little bit of a different rule. The MISCs, the Fed has an extended deadline that if you file by paper, it's February 28th. If it's electronically, you have until March 31st actually to remit that electronic file with your MISC filing. So again, complicated. There is kind of a distraction or a distinction between the NECs and the MISCs as to how you file them and when they have to be filed. So be very astute to those deadlines to avoid penalties. I would also mention as part of this is the state of Kansas, in our case, where we are here in Kansas, there's a reporting requirement to them as well. And so the Kansas Department of Revenue should be receiving copies of that or that same information, whether it's electronic form or paper form, they need to be receiving that information as well. This is a lot to take in. It's kind of like drinking from a fire hose. And so please consult the instructions or talk to your tax professional or accountant for more details. And remember, this is not to be considered legal accounting or tax advice. This is just informational to help steer you in the right direction. However, I say that you can also contact us for more information on this topic or to sign up to be a client for services as well.
Awesome. Okay, well, thank you, David. We really appreciate this information. I know that it's going to be helpful to all of our business owners out there. And as David mentioned, we do offer no cost advising with the Kansas Small Business Development Center of Wichita State. You can contact us at 316-978-3193 if you have more questions, or you can visit our website at wichita.edu/KSBDC. Thanks.